Ladies and gentlemen, this is Rudy Ortiz with the Arkansas District Export Council. If you will be patient, we will start in about a minute. Just allow a few more people to come on. Thank you so much for your patience. All right. Well, let's go ahead and get started. Once again, this is Rudy Ortiz with I'm the chair of the Arkansas District Export Council, and we've been having a series of finance-related webinars for the last few days pertaining to XM Bank products, SBA funding, different sorts of trade, international trade tools that one can use to try to mitigate risk. Exchange or foreign exchange currency, which we just had at 9 o'clock. And right now we're going to cover trade insurance, a really important topic to try to mitigate the risk of something going south and making sure you get paid. And we're going to have Mr. Brent Hoots to cover that topic. I want to start off though by making you aware that we are recording this webinar, and it is going to be available to you within about 48 hours after we complete it, along with the slide deck that we're going to utilize so that you can have plenty of information as reference material. I also want to make sure that you know that you can ask questions. It may very well be that we will hold off on questions until the end, but make sure that you put your questions in and we will be happy to cover them. Want to make you aware that the Arkansas Manufacturing Solutions, which is a department within the Arkansas Economic Development Commission, is sponsoring these series of trade-related webinars. Their mission is to assist manufacturers to maximize enterprise value by assisting them with innovation, operational excellence, sustainability, and leadership development. They're great partners and have been helping us put the word out and assist clients for quite some time now. We, of course, are the Arkansas District Export Council, and our mission is to encourage and support the export of goods and services that will strengthen individual companies, stimulate U.S. economic growth, and above all, to create jobs. And so now we're going to go ahead and switch over to Mr. Brent Hoots, who is the founder and CEO of NaviTrade Structured Finance. And Brent, take it away.
So thank you, Rudy. And good morning, everybody. Great to be here. My name again is Brent Hoots. My company is NaviTrade, and I'm a specialist broker. And one of the things I focus on is export credit insurance. So I'd like to walk you through a story today about a client of mine, actually from many years ago. And the point of the story is that by the end of it, so about a half an hour from now, I hope that you have a really good understanding of the strategic value and why you should be interested in export credit insurance. So this is a story about a company, middle market company here in the United States. Product, location doesn't matter. Export credit insurance is widely applicable to all companies in so many ways. But they were a nice sized company with a great management team, all about best practices. And they were focused on international. And they thought that they would find really good growth opportunities with international, and proceeded down that path on their own, going with best practices. And they made no mistakes, and they were going down this path, and they started bumping into a number of issues and problems and frustrations, and it became kind of a bit of a quagmire for them, and they were not going to achieve their overall objectives. So we were introduced to the company to stop by and talk to them, and we talked to them about export credit insurance, and ultimately put in place an Ex-Im Bank program, an export credit insurance program with the Export-Import Bank of the United States. And that program solved all of their problems. So this is actually a very dramatic story, and yet it's very reflective of the issues that we see day in and day out, over and over again with companies. So let's walk through this together. Stopping by to visit with the company, I was ushered into a boardroom, conference room, and we had a great group of people there. It was just all the right people from the management team. Again, seasoned pros, very much about best practices. And started the meeting, and they wanted to give me the lay of the land a bit. And the head of international started, and she said, you hired me to find international opportunities. There are lots of opportunities out there, and in particular, Brazil. She was very focused on Brazil. She said, this should be a great market for us. We should do well there. I think our market penetration strategy for Brazil will be to partner with the right company there, a distributor, and to partner with them, and then to move ahead from there. She said, we've looked at a number of distributors. We've found a really good distributor. So she proceeds to talk about Brazil and this distributor. And she said, one of the things that they talked about was that they really think we can ramp this business up to $100,000 a month. So this is great. This is kind of a home run for this company, 100,000 a month. That's $1.2 million for the year, right? So she said they're looking to get from us net 90-day terms. So net 90. So that's something, right? That's a bit out there. That's a little bit further than my clients typically like to be. We stop and think about that, and let's talk about that for just a minute. Great opportunity, good market, Brazil. My clients are a company, they know what they're doing. What about a distributor? Why are distributors thinking in terms of longer terms? Let's focus in on that for just a minute. So in this story, for my client, if they agree to net 90-day terms and $100,000 a month, then that turns into what? We ship on day one, 100,000, 30 days later, we ship another 100,000, 30 days later, we ship another 100,000. So this ramps up to $300,000 outstanding. And then 30 days later, we're finally at net 90, and the Brazilian company in theory would pay, and we would ship. Then every 30 days, they would pay, we would ship, pay, ship, so forth and so on. So that's a big deal to ramp this up to $300,000 outstanding. That's substantial for my client in terms of risk and also cash flow. 90 days is quite a while to wait for payment on your product. So risk cash flow for my client. And yet, this is a great opportunity. So we're very interested in what can we do here? What about the distributor? Why do distributors ask for longer terms? And this is a great example because this Brazilian distributor, their view was very much, well, look, we order the product on day one. It'll take two, 3, 4 weeks to get to Brazil, 2, 3, 4 weeks for us to get it into the market, then 2, 3, 4 weeks for us to get paid. So from the Brazilian distributor's point of view, this product cycle to cash is 60 days definitely, maybe out to 90 days. So that's what they're confronted with. So it's a real issue for them. And what do we know about distributors? Distributors tend to be thinly capitalized, which just means that, look, in this setting, in this situation, if they use up $100,000 to buy your product up front, they're not gonna get paid for 90 days, so they're out that money for a substantial amount of time, and that's a resource they could allocate somewhere else. So that's a problem for them. The other thing about distributors that we see a lot is when you think about overseas opportunities, where do you find a lot of your really great opportunities? Oftentimes that's going to be in emerging markets, right? So that the developing countries, emerging markets, and it is absolutely true that in emerging markets, we're going to be looking at markets that have relatively high interest rates and also a lot of times a lack of financial liquidity. So what does that mean? Interest rates, financial liquidity. So for the Brazilian company to finance this on their own, it might not be so easy for them to walk across the street to a Brazilian bank and just arrange financing. So relatively easy in the United States for companies, not so easy in a lot of overseas markets. And if they do achieve financing, it would definitely be at relatively higher interest rates than in the United States. So these are the burdens and the issues on overseas distributors' minds and what they're thinking about. So let's understand our overseas partners for sure. So back to our story. So we've heard from the head of international, doing a great job. We found a great market and a great distributor. The next person to speak up at the meeting is the credit manager. And the credit manager said, this is great, very exciting. International sounds like that's the way for us to go. But my job is to help the company to prudently manage risk issues. In this situation, we have two things we need to get our arms around. We need to understand Brazil, and we're still new to export. And what is Brazil? What does that mean? And we also have to understand the creditworthiness of the Brazilian distributor. Are they creditworthy? So the credit manager proceeds to talk about Brazil, and eventually lets us all know that we're okay in Brazil. There are issues, we can manage these issues. We're good on Brazil. Then he talks about the Brazilian distributor. He says, look, we ran a credit report. We've done extra research on them, talked to people in the industry. I like what he said. He said, this distributor looks like it could be a very good partner for us. We think they are creditworthy. But here's the thing. We're very much about best practices. And within our industry, net 30 and $100,000 credit limit would be generous for this distributor. Certainly not net 90-day terms and a $300,000 credit limit. So that was his position. Best practices, net 30 and 100,000. Okay, so we're bumping into an issue here for sure, the needs of the distributor versus best practices with the credit manager. The next person to talk at the table then became the CFO. And again, she was a seasoned pro, very good at her job, did a great job. She was also excited about international. She said, but look, if you're telling me that we're going to be pursuing multiple overseas markets and extending open account terms, even at 30, much less at 90, we are going to have a growing foreign receivable base, okay? And she said, and I've talked to our bank, they are not interested in financing foreign receivables, okay? So I'll ask the audience, is that true? The US banks not wild about financing foreign receivables? That's true, actually, that is true. US banks do not finance foreign receivables typically unless they're backed by the Export-Import Bank in the United States or a comparable private sector underwriter. So at this point in the story, this was where the CFO was. We don't have financing. So she says, look, if we get traction, if this takes off, we're going to have an ever expanding, growing base of foreign receivables that will shut us down at some point, not too far down the road. It's not sustainable. So this became an issue for sure. So the next person to talk at the table was the CEO. And as you can imagine, the CEO was all about a fantastic job, head of international. We're about growth. Credit manager, we certainly value what you do for us, and we're about best practices. And I've talked to the CFO, we do have a cash flow problem. So we were kicking all these things around for a bit. Finally, the CEO's position becomes, let's just go down this path. Let's go with best practices and see if we can make this work, okay? So that's kind of where they were when they were heading down this path. And let's walk through that together. A company applying best practices on credit and collections procedures, right thing to do, and what transpires. We'll walk through this together. On day one, we'll ship $100,000, right? 30 days later, the Brazilian distributor calls and says, hey, we're ready for that next shipment. The credit manager jumps on the phone basically and says, no, look, we're serious about the net 30 and 100,000. We're gonna go with that for a while, and you owe us 100,000. Well, the Brazilian distributor says, we're sorry, but we've not received the money yet. The product is still out there. We haven't been paid for it. So that's the end of that conversation, pretty much. Then another 30 days goes by, and the distributor calls again and says, we're really ready for more product. We've developed the channel. We're ready for more product. The credit manager jumps on again and says, look, we're sticking to net 30 and $100,000 credit limit. And now you're past due, okay? The Brazilian distributor, again, says, we've not been paid for the product. We can't pay you. That's the end of that conversation. So another 30 days goes by as we're approaching the net 90-day mark. What's happening that next 30-day period? The credit manager and his team are sending out emails and phone calls. You're past due, you need to pay us. So the Brazilian distributor this whole time is not happy. They're not getting the product that they want. They need more product. And they don't like these irritating collections calls from the credit manager and his team. What about the credit manager? Well, the credit manager, not happy either, says, you know, this Brazilian distributor is past due. They're not a good buyer. They're way past due. And they are just really hurting my aging, my receivable aging report. And receivable aging reports are very important. They're important for a company to understand what's going on, how they can manage their operations. Your bank cares about your receivable aging. Your investors care about a receivable aging. You want to keep that in order for sure. So the credit manager is not happy. And what about the CFO? So, well, she told us right up front, not bankable. These foreign receivables, we're not getting financing on them. So here we have $100,000 hanging out for quite a while. And so the CFO is not happy about that, right? And the head of international, what's going on with her this whole time? A lot of times when you have a problem, a payment problem, everybody looks to whose relationship it is. So the head of international is pulled into this and pressured to fix this and talk to the Brazilian distributor. Instead of spending more time finding the next overseas opportunity, which, by the way, who wants it? In this scenario, nobody's happy. It's frustrating. We're not going to achieve what we should. So where are we in this scenario? The total sales we would do, shipping every 90 days, instead of $1.2 million, remember this is $1.2 million opportunity, could be, we're going to do 400,000 instead of $1.2 million. What is the risk? It's the 100,000. We have 100,000 outstanding the whole time, and the company holds on to that risk. It's all theirs. So this was the quagmire. This is where they were, and it was frustrating. Mostly, they're just not going to achieve their potential. We again talked to them, and they said, "Let's try export credit insurance. We'll give it a shot." So we went to Exim Bank and applied, and that application process is not a complicated thing. And we talked to Exim Bank about the situation in Brazil. We said, look, we need a $300,000 credit limit, and we need 90-day terms. Exim Bank gave our client the program and gave us what we needed on the Brazilian buyer, gave us a $300,000 credit limit and 90-day terms. So I'm going to take just a moment to have a drink of water and let you all think about what I just said, because somebody in the audience right now should be giving me a hard time. So I'll let you. Somebody should say, well, you know, wait a minute, Brent, you told us that the credit manager was really good, did a great job, was about best practices. And in fact, it seems like you were saying that the company should do net 30 and $100,000 credit limit. That was the right thing to do. And your real question should be, doesn't Exim Bank have to do that also? The best practices policies for that industry and that company, what doesn't that also apply to Exim Bank? And the answer is no, it doesn't. Exim Bank needs to follow best practices for their industry and for who they are. So Exim Bank exists, and I'll put my hands on the screen. There we go. Exim Bank is way up here. They're a global underwriter, right? And a big player in the globe with a team of people 24/7, 365, people that this is all they do, right? They're super well connected to lawyers, banks, credit insurance groups globally, right? So they're very well networked. They have a lot of information, really good at what they do, plus full faith and credit of the US government in theory, right? So in fact, their tolerance for risk and their risk appetite would be substantially more than any of my clients. So when I look at my clients, I hope that my clients stay with best practices and that they stay where they should. And the point is that a partnership with Exim Bank lets my client get up to where they want to be. So that partnership with Exim Bank lets my clients move up to where they want to be to make things happen. And that's a very important point about export credit insurance. So we then start walking through, now that we have the Exim Bank program, let's walk through it now. So this is the after picture. With Exim Bank as our partner, what does their business look like? On day one, we ship 100,000. 30 days later, we'll ship another 100,000. 30 days later, we'll ship another 100,000, right? So we're gonna have $300,000 outstanding, and the Brazilian distributor is happy. They're getting the product that they want. So they're filling the channel, getting it into the markets in Brazil. The Brazilian distributor is happy. What about the credit manager? Wait a minute, the credit manager at 100,000 was pulling his hair out, right? We have 300,000 outstanding. The credit manager says, well, we're okay. We have this partnership with Exim Bank, and Exim Bank is covering us at 90%. It probably is 95%, but we'll say 90 in this scenario, 90%. So the credit manager says, our risk is only $30,000. So I'm okay. We can do these transactions because the risk is covered. And by the way, the Brazilian distributor starts paying every 90 days, just like they said they were going to. So the credit manager says, they're a good buyer. They pay timely. Look, my aging is good. So the credit manager's happy. What about the CFO? Remember, the CFO was not happy about 100,000 outstanding because it wasn't bankable. So the CFO reports back to us and says, well, I'm okay with 300,000 outstanding because I've talked to my bank and they understand Exim Bank and the value of that. They're willing to put those foreign receivables into our borrowing base. So we have a financing strategy. So this growth, if we get traction and it really takes off, this is sustainable. We can finance it. We can do this. So the CFO is happy. What about the head of international? Well, the head of international has been spending all of her time moving on to find the next great overseas market opportunity for this company, and everybody can't wait. Let's do it. So it's working, it's smooth, and everybody's happy. Good deal. So now with Exim Bank as our partner, this company is projected to do $1.2 million for the year, 100,000 a month, right? Look at this. Their risk is only going to be 30,000. Remember, on their own, they held the whole 100,000. That was their risk. With Exim Bank as their partner, their risk is now only 30,000, and they've blown the sales right off the charts. So good deal. Good deal for everybody. That's the quick story. There's a lot more to talk about there, but that's the quick overview. What is this story about? And I always want to stop and talk about this. This is a story about a company that was about growth, and they were pursuing international for growth. Okay, so on that journey, they bump into risk and financing issues, but the story is about growth. Our partnership with Exim Bank helps us achieve our growth and our marketing objectives and addresses the side issues. Interesting point, they estimate 80% of European companies utilize the equivalent of an Exim Bank program. In the United States, they estimate that number to be 8 to 10%. So this is terribly underutilized. It's so valuable, and we've got to get on board with this, and we should do it proactively. Moving ahead to get a program, we say Exim Bank, Export Credit Insurance Program. What is all that? What are we talking about? So the most important thing to take away here is that getting an Exim Bank program is easy, fast, and cost effective. So this is one of these times when you really are going to be definitely wanting to have a broker specialist like NaviTrade, and call us. We'd love to work with you. Pardon me. Or you can go to Exim Bank's website, www.exim.gov, and they have actually a broker locator. So you can find there are other specialty brokers in the country that do this. So love what NaviTrade's about. We have our own approach and would love to work with you, but there is definitely a broker out there that can help you. the process becomes you get a broker, they pretty much do the application process for you. You can have a program up and running in a week and a half or 2 weeks, fast. No payment up front. It's pay as you go. And if you put the program in place and don't use it, there's nothing to pay. And if you have a transaction, let's say in the month of, what month is this? January. If you have a transaction in the month of January, you would pay to Exim Bank by the end of February, by the end of the next month, 0.5%. It's right around 0.5%. So pay as you go, 0.5%. I have no clients that would not pay 0.5% to reduce their risk from 100,000 to 30,000 and to increase their sales from 400 to 1.2 million. This is like a no-brainer. This is not a cost issue. So you can also do a multi-buyer or a single buyer program. And most of my clients do multi-buyer programs. You put that in place and just start adding countries of buyers very easily. I skipped one thing, the documents. We apply to Exim Bank. Exim Bank is going to say yes 95% of the time. Then they'll send documents. Another valuable point of having a specialty broker, they'll walk you through the documents and then they'll help you manage that program, especially the first year, so you maximize it and get it right. So that's the quick overview. Think in terms of international opportunities, all the things that go with that, the sales and marketing issues, the risk issues, and the financing issues. Export credit insurance can very much become the linchpin that balances things and makes everything work. So that is the quick story and a quick overview. Really love that you're participating, and the Arkansas deck does a great job, and Rudy and Heidi are fabulous and so fun to participate and do these things. So thank you so much, and I'm available for any questions at this point.
Hey, Brent, I had a question. You actually broke up on my screen a little bit, and so it got a little garbled on my end. The $30,000 risk that you were describing, is that for the 300,000 or is it for what amount? You mentioned the
I'm sorry, Rudy, can you repeat the question?
Yes, you mentioned something about a $30,000 risk that was left over. Is that on the 300,000 or on what is that $30,000 risk or was it 3,000?
Right, I'm sorry. I think I probably.
Is it 3,000,
Yeah,
right?
so no, in this story, if you actually go ahead and ship 100,000 a month, you would have 300,000 outstanding, right? And then 30 days later they pay and you ship. So this business becomes on average $300,000 outstanding all the time with the Brazilian distributor. If that all goes bad, if they don't pay you, if you're on your own, your risk is $300,000, right? Okay.
Without
with
insurance.
Exim Bank, yeah, with Exim Bank as your partner, and I think I left this out. Exim Bank is going to cover that at 90%, or maybe I did say that, but maybe it cut out. But Exim Bank will cover you at 90%. So when you look at 300,000, 90% is covered. Only 10% is your risk. That's 30,000.
Right.
So on 300,000 outstanding, you would hold $30,000 of risk. But remember, in the story, if you were on your own and just did $100,000, your risk is $100,000.
Yeah. So if with XM, if everything went south and they didn't, and the company wound up paying nothing, instead of owing 300,000, instead of being out 300,000, you would be out 30,000.
Actually, probably if you qualify for the small business program, you'd probably have 95% coverage, which most of my clients have, which means you'd only be out $15,000. So ridiculously huge percentage of coverage. Good deal versus a catastrophic loss. Most of my clients do not want to deal with a $300,000 loss. So.
Okay, we've got one question. Says I may have missed this. After contacting Exim Bank, how long did it take to resolve their issues and become profitable? I'm not sure I understood that question. Do you understand that question?
Well, in the story, yeah. Well, I can answer it in one way, and that is that again, this company went down this path on their own. It was a bit of a mess and they were frustrated. Then we put in place the Exim Bank program. That process usually takes anywhere from 1.5 to 3 weeks. So at the point that we talked to the company and said, you have a mess, let's fix it with an Exim Bank program. We start that process, they will have a program in 3 weeks, if not 2 weeks. And then their transactions start happening the way they should happen, and everything resolves itself pretty quickly.
Yeah.
I don't know if that's helpful, but
So around 2 to 3 weeks once you start the process, is that correct?
yeah, fast.
All right, well,
Very
very good.
fast.
I don't currently see any other questions. I think we'll allow a few seconds for somebody to submit another question. Unless, Heidi, do you see another question besides the one I outlined?
No, I don't.
Okie dokie. Very good. Brent, any last words of wisdom? My apologies. That was my clock chiming.
All right, well, thank you, everybody. Very nice to be here. Thanks, Rudy. Thanks, Heidi.
Yeah, and you broke up a bit there, Brent. In any case, I want to remind everyone that we are going to have the recording sent to you guys within about 2 days, including the slide deck, so that you can have this information as a resource. We know it's just about impossible to take notes effectively enough. So we want to make sure that you have this information available to you. As always, the Arkansas District Export Council is here to be able to help you in any way we can to try to provide mentoring and education and assistance in your efforts to find new markets and to be more profitable. Here's our contact information. There's my personal contact information in terms of my email address, and Heidi Whitman is our administrative coordinator. There is her email. If you have any questions, feel free to contact either one of us, or if you have a question for Brent himself, there is his email information as well. And thank you so much for attending. And this completes the 4-part series on financing international trade. Thank you again.
All right, thanks so much.
Thank you. We'll talk to you a little bit later, Brent.
Thanks, Rudy. All right, bye-bye.